and welcome back to another episode of The Vault, where we unlock stories that matter here at FNBO. I'm Amelis Long, and I'm excited to be your host again this week. If you're thinking about buying a home, refinancing, or just interested in home buying and mortgage industry trends, or you happen to like a really great channel that has a lot of shows about home buying and redesigning your home like I do, then this episode is for you. I'm so excited to welcome my friend Patty Gong, Managing Director of Mortgage, to The Vault today. Patty, welcome to the show.
Thank you so much for having me.
Yeah, well, thank you for making my dreams come true of being able to talk about things that I love to watch on TV. Why don't we start by just tell us a little bit about yourself.
My entire career is in mortgage. I've been in the mortgage industry for a little bit over, let's just call it 25 plus years. And yeah, most of my career has been in capital markets.
Home buying is something that's such a milestone in folks' lives. And so to be able to have someone who can walk us through things that are important for first-time home buyers, as well as folks that are looking to refinance, or just folks that want to hear the trends that are happening in 2026. So we're really excited to dive in today.
Thank you.
Should we get started?
Sure.
Well, Patty, I know over the last 4 years, you've seen mortgage change quite a bit, but it's also an industry that's constantly changing. As we dive into the episode, can you give us maybe an outlook of what to expect in 2026?
Overall, home buyers are still facing some stiff headwinds with affordability and availability, but we're seeing some signs of stability in the industry. And with mortgage rates, we're seeing some signs of stability there as well. As we step into 2026, rates have stabilized. So that's a good news for our home buyers.
Yeah, that is great news. I know that that's one of the key things that folks really need to be paying attention to as they kind of start the home buying process or the refinancing process. Can you talk to us a little bit about the importance of interest rates and what that does mean for a potential homeowner?
Yeah, interest rates make a big difference in the home buying process. Sometimes changes in interest rates seem small, right? Like 0.25% in interest rates on a $300,000 mortgage, for example, might only be like a $50 difference month to month. But over the entire 30 years of that mortgage, it's tens of thousands of dollars.
Right.
But more importantly, I think the factor of interest rates changing is it impacts how much house a buyer can afford.
Mm-hmm. On the topic of interest rates, I know something that I hear a lot about, I'm sure our listeners do too, are about the Federal Reserve. Can you talk to us about what that means and what that means for our home buyers?
Yeah, if we think about what the Federal Reserve does and how they impact rates, we kind of need to go back a few years.
Okay.
So in the pandemic years, the economy was facing some troubles. And so the Federal Reserve in reaction was really trying to help bolster the economy. And what they did is they started lowering the interest rate. So that what we're talking about is the Fed funds rate. And the other thing that the Federal Reserve did is they started doing something called quantitative easing. That's when they start buying mortgage-backed securities and treasuries. So in doing that, when they buy mortgage-backed securities, it actually does this thing where it causes demand for mortgage-backed securities. And mortgage-backed security prices end up going up, which makes rates go down. And so in reaction, mortgage rates during COVID years dropped to 3% and even sub 3% rate range. Subsequently to that, right, after kind of the true COVID years, the thing that the Federal Reserve was fighting wasn't so much the economy and the health of the economy, but really inflation. And I mean, I think all of us kind of felt the factors of inflation and how it really affected us. And so when the Federal Reserve was trying to fight inflation, they had to do the opposite of what they did during the COVID years. And they, in turn, raised the Fed funds rate and then stopped buying mortgage-backed securities. That actually had the opposite effect and made interest rates have a steep increase and a quick and steep increase. And so rates in those years shot up to over 7%, right? So we went from sub 3 to over 7% in a very short period of time. And so that really caused a great kind of disturbance in the mortgage industry. So as we kind of step into 2026, what we're seeing now is that we're never going to see the 3%, sub 3% rates again. And but we are now well below that 7% and over 7% rate. And we're kind of stabilized, and we've stabilized in that 6% kind of up and down, like right around 6% rate. And so that stabilization is really good for our industry.
Thanks for giving such a thorough explanation. I'm not sure I've ever had the opportunity to hear the whole story like that. I'm sure that'll be really helpful for our listeners. I think another key factor is availability. And I think that's something that's kind of had its up and down since the pandemic years too. Can you talk to us a little bit about that?
Sure. I mean, if you think about housing availability, one of the things that plays a big factor in that is that interest rate thing that we were just talking about. Our industry has something that we've called the lock-in effect, and it is really where, kind of in the natural course of events, homeowners typically, maybe they grow their family, or, their family size decreases even, and they normally would switch their home, right? Buy a bigger home for more kids, or maybe empty nesters buy a smaller home. Mm-hmm. What has happened, though, is with a lock-in effect, if they had bought their house in, the COVID years or refinanced during the COVID years, now they have like a 3% rate or a 2.5% rate. And then if they were going to go back out to market, now the rates are 6% or, in the past, even higher than that. Instead of switching their home, they're just going to stay put and stay in the home that they're in now and just make do or expand or, whatever, stay in that house. And so because of that, there's fewer homes in the market and homes aren't turning over, right? So we have seen kind of less homes available in the market. And the other thing that has been interesting in this time period is because of the lack of inventory, we're actually seeing builders step up. They're seeing an opportunity with less existing homes going out for sale to step into the market. And we're seeing in our communities some home builders taking advantage of the opportunity and building more homes.
So with these home builders taking an opportunity and adding inventory into the market, what does that mean for home buyers now that there could be more houses in their community to consider?
Yeah, so as inventory increases, we're seeing some more stability, but it's still a little bit of a challenge. But as inventory improves, what we're seeing is that kind of there's a power shift between sellers and buyers. When inventory was super tight, all of the power lived with the sellers, right? And buyers were faced with overbidding and not having the ability to negotiate. And so now as kind of the balance of power is more stable and balanced, we're seeing houses sit on the market maybe even a little bit longer and not some of those overbidding situations and less competition for the few homes on the market. This gives buyers a little bit more opportunity to be careful and take their time to really balance the house that they buy to make sure it fits their home situation and their budget.
It's funny you say that. As you were describing it, Patty, I was thinking of my own neighborhood and watching it over the last few years. There was a period of time where a house, we wouldn't even get a sign put out in the front yard before it was just went from no sign to sold, and things were going so quickly. And now we have houses that have been on the market for quite some time. So that I guess I can really see that now that you explained
it's intuitive when you kind of see the bigger picture.
Yeah, for sure. So what does that mean? It sounds like folks need to really be mindful of timing. Talk to us a little bit about the timing of purchasing a home now that these dynamics are switching.
Yeah, when I talk to potential home buyers, I really tell them to be patient but not too patient, and to be flexible but not too flexible, right? So what I mean by that is, you really have to be patient especially as a first-time home buyer, because, they face, getting overbid and then getting overbid again, and they just kind of get so down on themselves, and they think, I'm just never going to be able to buy a house.
Yeah.
But I just tell them to be patient and keep making sure that they improve their situation and keep, putting the good offers out. And eventually their time will come. But I also tell them not to be too patient because, there's some home buyers that have said, oh, I'm just going to sit on the sideline and I'm just going to wait it out now. Home prices are just going crazy or the inventory is never going to swing my way. And they just stay on the sideline. And then, they're missing out on a chance to build wealth, generational wealth, or build their home ownership dream. And so I don't want them to be too patient either, right? And then in terms of flexibility, I want them to be flexible, but not too flexible. They do need to make sure that they're using their brain and their heart to buy a home. And so they can't let their heart just get away with them and overbid and buy something that's outside of their price range, right? But they also need to be a little bit flexible. Like maybe their first house can't be their dream house, right? They can't just automatically buy the one that is beautiful and pristine, nothing to be fixed. Maybe they need to do a little bit of improvements and, watch some of those home shows you watch.
I was going to say, this is sounding oddly familiar from my TV watching.
That's right. So they might need to buy a little bit of a fixer-upper or maybe buy a house that's a little bit smaller than they want for their ultimate dream home, or maybe even a little bit farther out from their perfect neighborhood in order to step into the market. What matters in one state is different than another state. And even within one state, city to city, it's different. And even in a city, neighborhood to neighborhood or street to street. There was a story that one of my loan officers told me about in the inventory situation in her city. And there was one property that was so popular, and 3 of her buyers, her own pre-approval candidates, were going after that property.
Wow.
But meanwhile, 2 streets away, the other house had no interest at all. So inventory and, kind of what is available is so local.
Yeah. Well, I mean, what I hear you saying, and it's just like those TV shows and my own personal experience, it's such an emotional process.
It really is.
But it's also a really strategic process. You can really make a big difference, like you said, in building that generational wealth.
That's right.
Right timing, being flexible, being patient, and just waiting for the right house, but not waiting too long.
That's right.
Yeah.
That's right.
Okay, Patty, so we've talked a lot about the nitty-gritty details of the mortgage industry, why interest rates matter, why availability matters, and while what the potential home buyer is doing, being flexible, being patient, all comes into play here. One thing we haven't talked about is actual home prices, and they've gone up a lot in the last several years. Tell us about that and also what you anticipate in 2026.
One of the factors of lack of inventory, it really drives home prices up. So we're going to go back to the COVID years again. In that time period, availability was really low and inventory was really low. And so home prices shot up in double digits year over year. I mean, I think we saw 19% year over year, one of the months. In 2026, we're still seeing home prices go up, but it's a much more moderate pace. It's, somewhere in the 2.2% range. It's not going up, double digits year over year. So that means people can really take their time and pick the house that works for their family and their budget.
One thing that isn't directly connected to the mortgage industry, but plays really closely to everything we're talking about is also wage increases over the years. So tell us a little bit about why that plays into this whole home buying and refinancing process.
Yeah, wages are a big factor, right? When you talk about wages, it is a factor of affordability. Can that potential home buyer afford that house? And so wages have not been keeping up with inflation over the past few years. But when we're looking into the forecasts, we are seeing that that's changing a little bit. In 2026, we're actually expecting wages to increase by 3.5% versus inflation increasing by 2.6%. So as wages increase a little bit faster than inflation, it gives potential homebuyers a little bit more buying power.
Why don't you tell us a little bit about maybe some thoughts you'd have for someone who already owns a home and maybe bought into those higher interest rates. What should they do now? Should they be considering refinancing?
Yeah, now is a great time to consider refinancing, especially as we're, hovering around 6% now. If someone bought a home in the last few years when rates were 7 or even above 7, take a peek at what the rates are now and talk to a loan officer to see if it might be a good time to refinance.
Yeah, taking advantage of that stabilization that you mentioned for 2026.
That's right.
Well, what about those who are maybe wanting to be first-time home buyers, and maybe that's on their vision board for 2026?
Yeah, my advice to someone that is considering buying a home is to really take the first step of meeting with a loan officer. A good loan officer will be able to help them kind of plot their next steps, right? So someone who is ready to buy a home for the first time, or even someone who's maybe even considering whether or not that might be something that they want to do in the future, a good loan officer can help them figure out what they need to do to fix their credit or maybe lower some of their debt, or even what their maximum house that they can afford to buy. Mm-hmm. So that's a good first step for someone who's considering buying a home. A lot of times when we're talking to first-time home buyers or people that are renters, they have some, maybe misconceptions in their heads about what they need to have saved as down payment. And we actually see some, good products and some down payment assistance options in the industry that really can help some potential first-time home buyers really make that step from becoming a renter into becoming a home buyer. But they wouldn't know that until they really explore it with a loan officer.
Yeah. It sounds like it's a great time to reach out to someone, have a good conversation, and see if that home buying dream can be for them.
So one of my loan officers shared a story with me about a potential first-time home buyer they were working with. And they worked with that person for 3 years to get them to be ready to be able to buy a home, right? So they worked with them on repairing their credit, on getting their down payment situations set up. And, then their dream became true and they were able to buy their first home. And it was so rewarding for our team to be able to celebrate that.
Oh, yeah. What a journey to go through and to have someone who could really walk alongside with them to make that dream come true. Like, what an amazing story, Patty. Credit to your loan officers and all the work that your team does to be there along with our customers. Well, as we close today's episode, what are the key takeaways for our listeners?
If I could summarize it in 3 points. First, be flexible, right? When you're looking for a home, be flexible about what you're looking for. Maybe go a little bit farther or think about buying a little bit of a fixer-upper or maybe a slightly smaller house. Be patient, but not too patient, right? Be an active participant, but don't sit on the sidelines and let the opportunity pass, but don't get discouraged by being outbid. And last, I would say, use your loan officer as a trusted expert and have them walk alongside you on this home ownership journey. 3
great tips for our listeners. And certainly it's not as easy as we see on TV, but we have trusted people that can help you through the process of owning a home or refinancing. Patty, thanks so much for joining us on The Vault today and sharing all your great information. Appreciate your time.
Me.
Thank you all for watching another episode of The Vault, and we so appreciate you joining us. If you enjoy these episodes, be sure to like and subscribe. We'll see you next time. The Vault is brought to you by FNBO, member FDIC, equal housing lender. Podcasts are for informational purposes only and not intended to provide specific advice or recommendations. When making decisions about your financial situation, consult a financial professional for advice. Podcasts are not regularly updated and information may become outdated. Deposit products are offered by First National Bank of Omaha, member FDIC. Investment products are not FDIC insured and not a deposit or other obligation of the bank. Not insured by any federal government agency. Not guaranteed by the bank and may lose value.